I'm going to highlight 5 financial industry stocks you can buy today at reasonable or undervalued prices. In fact, 3 out of the 5 stocks I'm going to mention in this video, I personally own myself. So I'm going to share with you the details. I'm going to share with you the proprietary discounted cash flow valuation calculations to demonstrate the valuation. And if the stock is not undervalued, I'll give my reasons for why I still think it's a buy, even though the stock is not undervalued. Financial services or financial industry stocks and the financial industry overall, in my opinion, is an attractive industry to invest in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Right. The first out of the 5 stocks I'm going to highlight is Visa, and this is one of the 5 that I own myself. Visa current market price is $366 per share. The intrinsic value I calculated according to my discounted cash flow valuation spreadsheet you see here is $404 per share. Of course, Visa has over 4 billion Visa cards in people's wallets today, and that is a significant competitive advantage for the company that has a strong two-sided network with both people that have Visa cards in their wallets and businesses that accept Visa as a payment method. Of course, that's a positive virtuous cycle. The more people that have a Visa card, the more businesses are going to be interested in accepting Visa cards. The more businesses that are interested in accepting Visa, the more people will find the Visa card attractive. And so that positive virtuous cycle has fueled Visa's growth to over 4 billion Visa cards outstanding. And on top of that, Visa is one of the most profitable companies in the world with an operating profit margin over 60%. I really like Visa. I own Visa myself, and I still think the stock is undervalued at current market prices. The next stock I'm going to highlight is SoFi. SoFi is a digital bank investing in all financial services company that aims to be everything you need for your financial life in the United States. It tries to have your student loans, home loans, personal loans, credit cards, investments accounts, etc., etc. It wants to be a one-stop shop where you can do all your financial services in one place. The intrinsic value per share I calculated for SoFi is $20.24. The current market price is just $14.10, signifying upside even from the current market price for SoFi stock investors. The next stock I'm going to highlight is MasterCard, which you were probably thinking about as I was talking about Visa. You're probably asking yourself, what about MasterCard? Well, I like MasterCard also. I own MasterCard stock myself, and the intrinsic value per share I calculated for MasterCard is $525. The current market price is $584. It could be slightly overvalued when looking at it from this perspective, but I'm okay with that because MasterCard, like Visa, is such a dominant business, very strong operating profit margins, almost as good as Visa, slightly below Visa in terms of operating margins, but MasterCard has a better international presence. It has better growth prospects, slightly, I would say, and over the next few years, it could close the gap to Visa if it continues capitalizing on its growth opportunities. Like Visa, MasterCard has a significant two-sided network with a lot of merchants having the MasterCard in their wallets, and then a lot of businesses that accept MasterCard as a payment method. Another reason I like MasterCard and Visa is because the competitive nature between the two is very light. They don't go and lower their prices that they charge merchants or increase incentives to try and increase market share. They just kind of uh, keep the status quo. They work together to keep disruptors from taking market share away from the industry leaders like Visa and MasterCard. And while businesses will complain that they don't compete against each other, investors can benefit from that fact. The next stock I'm going to highlight here is PayPal, and this is another one of the 5 that I own myself. The intrinsic value calculation is $118. Current market price is $73.55. And PayPal is in the earlier stages of growth compared to Visa and MasterCard, but I look at it on a similar way because it has that tailwind, that virtuous cycle that it benefits from, just like Visa and MasterCard, but it's more focused online. Its competitive advantage is stronger online because You don't need to take out your Visa or MasterCard and type in the information when you're making a purchase online. You can just log into your PayPal account and make a payment. So it makes it a lot more convenient to shop online. It also makes it a little more secure because you don't have to type in your credit card information on a new website. So its competitive advantages are stronger online. And thankfully for PayPal and investors, people are spending more money online compared to in person. So it's benefiting from that tailwind and the competitive advantage and the convenience advantage it adds to online shopping. That's one of the reasons I own PayPal myself. PayPal has over 400 million monthly active customers, so 1/10 of the size of Visa in terms of monthly active accounts, but it benefits from that similar trend, right? The more people that have a PayPal account, the more businesses are going to be interested in accepting PayPal as a payment method. And that's going to attract more people to use a PayPal account. And that positive virtuous cycle can go on, facilitating growth. At one point, PayPal's management team was talking about reaching 1 billion monthly active customers. And as their growth rate kind of slowed down, they stopped talking about that. But that could still be a figure that investors kind of have an eye towards for something that longer term, maybe in the next decade or two, that PayPal could reach that kind of scale, which of course would be great for PayPal stock investors, even if they approach that, not 1 billion, but maybe if they just get to 700 million, that would be almost double from where they are today, which of course would mean that the business is much more valuable at that point in time. And last but not least, Stoneco is a Latin American financial services company. It operates primarily in Latin America, and it's done a great job gaining market share in that region. The Latin American economy, I forecast it will grow much faster than the US economy, but also it comes with greater risk because that economy faces greater volatility, less established political facilities, less established institutions. And so that economy can be more volatile, and it's reflected in its beta. The beta of 2.26 is much higher than any of the financial companies I'm recommending here. The intrinsic value per share still shows an undervalued business at $20.62 compared to the current market price of $13.25. Of course, I've shared with you the valuation based on my proprietary discounted cash flow model, but I also like to look at valuation on another perspective. And what I'm looking at here is the forward price to earnings ratio. And I'm getting these numbers from FinChat. Of course, there's a link in the description if you're interested in these services. And when I look at the forward PE ratio of these five companies, they all look undervalued according to this metric, or I should say undervalued or fairly valued according to this metric. The ones that look fairly valued to me are SoFi, Visa, and MasterCard. Those look fairly valued. The ones that look undervalued are PayPal and Stoneco at a forward price to earnings of 14 and 8 respectively. The valuation of SoFi is the most expensive at a forward PE of 43, but SoFi is also the fastest growing out of these five companies, and it has the biggest opportunity in terms of the total addressable market because what I talked about SoFi, it aims to do a lot of things for a lot of people, not just one or two things like some of the companies that I recommended here. So there you have it. Five spectacular financials that I think make an excellent buy at current market prices. I own three of these stocks myself, and those are PayPal, Visa, and MasterCard. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.